Good evening, I'm Giuseppe Basile. I'm the analyst and trader. You can find at the website www.fibstalkertrading.com. I also post on my blog fibstalker.com, and I post regularly on Twitter using the @fibstalker nickname. Good evening. Today is January 11th. It's Sunday, and it's 15 past 10 time in Toronto. This is the EST time, North American time. In this review, this is a review I distribute to my free newsletter subscriber. I'm going to review the 13 markets I follow, and this includes the majors, the SP500, the dollar index, gold, and a few other pairs, forex pairs I follow. In this analysis, I use the Fibstalker methods, and that's my method. I have researched and developed working with traders and mentors. I started trading in 2001. So let's start and dive into the euro versus the US dollar, which is the chart that you see on the screen. Moving to the weekly, we know that the euro dipped into this large area of potential support starting at 120, 125, and although the market dipped into it, we're still in an area where support and algorithms on the long side of things could actually come in and trade this market higher. The market in the 4-hour time frame has been moving in extension short. I've shown this on Saturday to my student of the Fibstalker methods. The new coaching program started on the 10th yesterday, and I have 13 students, very excited. And now going back to the euro dollar here, what we can actually anticipate it's a continuation lower, at least until on the daily time frame market actually moves well above this 120.60. That would be for me an indication that this move lower has paused at the moment, and there'll be a confirmation that the profit taking or longs coming into that area in the weekly time frame I showed you before are enough to keep pushing this price higher, at least for some time. Some analysts believe that this strong move lower of the euro has been anticipating intervention on the ECB, and we're going to learn this in the coming weeks whether the ECB will start doing anything. Now, if the ECB start easing, this may well be bullish for the euro dollar, at least for some time. Moving to the SP500, the SP is still on a screaming long here, although some people are worried about the ways that it has been moving laterally recently, and actually a confirmation of the fact that this market is actually moving laterally came last week. This market broke the 2010 here on the downside, which means that bulls were not able to sustain this price after they sustained level the 1967, a level that we were able to capture well before the fact, and we timed using the Fibstalking timing technique, getting a very good entry here. But as I was saying, the shorts also are not able to clearly hold this price lower. So at the moment we are seeing a lateral move on top of a potential area of support here, and you have to remember that in the larger time frame this market has traded at 1832 on the previous contract, and we have first target 21, and also the larger time frame shows actually shows a measure move here around the 667 here, which was the low. Now you see 535 here, but the only reason for that is that this is a continuous contract, so you won't see the actual price this market had at March 2009. I was there. The low was 667, And this whole move in the last decades, since 1999 to 2009, was actually retracing to the all the way halfway back with a target in 2500. So that's where we have to anticipate this market moving. If you want to know more about what I believe about the main commodities, the markets, oil, and the forex, you can actually join me on January the 20th. We'll have a premium webinar on fxstreet.com. I'm a contributor to FX Street, and I also lead the Toronto forex group together with FX Street and CMC markets. So um, now let's move to the dollar index here. We know from what happened to the dollar index that this market is actually obviously on a screaming high, move higher here, but also we know that there are two levels that this market could retrace to. The lower level and almost certain level to me is the 100 level. Above that there is this 180. So will the market just keep moving higher? Well, I don't believe so. We might see a correction, especially if the euro start getting some traction there. However, anything can happen in the market, so it can also happen that this market just continue higher. Now, on the weekly time frame, you can see an extension long here, which played beautifully. I was able to identify this only after the fact, but you have to think that even after the fact, these indications here are very important because allow us uh, to do perform price discovery. So we have the second target now, and there is the potential for this market to retrace all the way into the next measure move long, which is a very shallow one, and a lot of people are not able to explain these moves, but that's the way the market moves, especially if it's an extender like in this case. And this level will be watched by algorithms very closely. Moving to the gold, gold has been linked more to what the ECB has been doing rather than the dollar. Typically gold trades against against the dollar, but that's not the case. Or actually, I should say, trades more aligned to the Fed balance sheet, while in the last few months and 2 years has been aligned probably more to the ECB balance sheet. So what we are seeing here again, this market, likewise the euro into this 50% retrace from lows, past lows in 2001 here. As you can see here, two highs. We identified that area of potential support here starting at 1230, and we are still seeing some participation at the level. So it's possible for this market to actually start a move higher as soon as the euro is going to move. And the reason for that, again, I repeat it, is because it appears that this market at the moment is linked to the euro and not to the dollar. And actually this market could actually get into this 1470 in few months. Moving to the US dollar versus Japanese yen, those who follow me know that I was able to capture a big move in this market, actually two big moves. The first one was the setup at 94, and that came as an extension here, which I traced well in advance, and you can go and check my videos on my website www.vipstalker.com. I have over 500 videos there, and I make this review always before the fact. And when we saw this high here, I traced the highs to highs, and there was participation at this 94. Now remember, I never buy this level blindly. I have a procedure which is a step-by-step procedure that allows to study the sequence of measured movement in the smaller time frame, and only when that fails, indicating that there is participation from the larger time frame at this 94, then I get involved. So price eventually went into the first and second target. I called these two targets on August the 1st when FX Street published a review of the economy, Japanese economy. You can review that on fxstreet.com. You can search for Japanese economy, Giuseppe Basile, which is my name, and you will find it. Now, this market actually went to the first and second target, so on the weekly time frame, we know that weekly algorithms will only be interested in buying this market if it gets back into this 112.85. That hasn't happened already just yet, I would say. What happened is that the market has continued moving higher here, and you remember that those who follow me will remember that I traced this measure move here, which went into the first target, didn't touch the second target, so the market came again, and all these levels here can be timed in advance. For example, this one could be timed with 2 weeks in advance, and that's the power of the Fib Stalker methods. You can identify this 50% level here in advance, and then use another timing technique, the Fib stalking timing technique, to enter with very low reward to risk. And these are levels that price analysis, price action, or supply and demand are not able to identify precisely in advance. Why they are there? Because algorithms are there. And a lot of people would believe that this reaction is because of this previous highs, and it's very rare that this level actually coincide. What is important is also studying the sequence of measure move that algorithms bring about in market with high volume. So this is this measure move here, which was possible. We were able to trade, hit the first and second target, and then actually we had the daily trading again, this high to high again traced before the fact, with 2 weeks in advance and participation on the upside. What is important to notice here is that this market on the weekly time frame is neutral because it's waiting for a retracement into the 1280 level here. And on the daily time frame, there is a secondary test, which could be dangerous retest. Actually, it's always a dangerous retest on the daily. So if we get below 114.55, we are going to retest the 112.80. So if you are short, stay short, and see what happens at this 115, 116 level. Moving to the euro versus Japanese yen, we anticipated this move lower. The reason for that, on the daily time frame, that the sequence of measure move failed here, and I'm going to show you which sequence I mean here. This was an extension that initially worked, as you can see here, and but then before this move higher, that sequence has broken, and when that happens, the market can get close or into the first target and then start a retracement because there's no support on the daily. So this market now can potentially go and trace into the all the way halfway, into this anchor here, to this notable anchor here, or all the way halfway back. So that's where we can see this market. If you are short this market, you should stay short this market and see what happens around the 130.70, below 126.15. The 121, 122 level is going to be retested. Moving to the pound versus Japanese yen, this market actually has been moving higher in extension longs, but then now came into this large area of resistance, and this market has been beautifully technical. It's trading in extension, and every time it's coming back to every time it gets into the first target, it's coming back and trading the next extension here. So at the moment, the market has traded this new setup at 168.70, being pressed into that first target, and now this market is actually retracing into the next measure move and that's from high to high. So if you see this dip retracement, that's the reason, and a lot of people are not able to explain this retracement because they do not understand the effects of algorithms on price in large high volume um, instruments, and that includes forex, includes stocks, some stocks, the high volume stocks, the high volume equity futures and commodities. Moving to the euro versus Canadian dollar, this market, as you know, I'm looking for a retrace into the 138.50. It's still 30 pips shy of that. So I believe that before this market can go higher, I mentioned this now since a few months, we'll need to retest that level. After that, we could see this market actually continuing to move higher. There's no reason to believe that this market is going to continue lower. Um, the euro, as the euro recovers a little bit, I think this market is going to eventually reverse, and if he touched that 138.50 and he gets participation from the weekly time frame, there is the possibility for this market to get into 143.32. So that's what I see. That's what I see in this market. Moving to the pound versus the US dollar. This market has been clearly like the euro. I mean, it's not immune from the euro economy and the euro. And actually, we know that this market actually got into that same 169.50 area of potential resistance here, which was tested back in 2009 and then again in uh, in 2013 here last year, and then we saw this beautiful move which could be modeled within extensions on the smaller time frame into that 153.55. Now it's dipping into it. If he loses 149 at 18 here, we're gonna see a potential continuation lower, maybe after bounce, but then on the larger time frame we will see program trading. If we bounce after that 61.8%, 149.18, it's pierced, we would actually see a bounce into a 160 level for a continuation short. Moving to the Australian dollar versus US dollar, this market is also reaching a potential area of participation from the players on the weekly time frame. It didn't get there just yet, so I traced here an extension move. This is at, an aggressive short, but if the market gets to that 084.42, especially before hitting this 50% level here, the 089, 20, 30 area here, if we get into that level and we see participation, this market is going to continue lower. That's how algorithms are placed and positioned in this market. US dollar versus Canadian dollar, I had to reverse my view on this market, and I had not understood which were the algorithms that were driving this market higher. Now everything is clear. It's an extension from highs to highs, and this market, believe it or not, will retest the 126.28. There's no reason why this market could not do that. Saving any kind of intervention, which I don't see at the moment being done by the Canadian dollar. The Canadian dollar and the Canadian economy will be under pressure because of the price of oil going down, but eventually the benefits of a lower price of oil will actually propagate to the real economy, especially manufacturing in Ontario, and I also believe that the exchange with US dollar is going to help the economy. The point is probably that the negative effects of growing of a lower oil price will actually show before the positive effects of an improving economy. So at the moment we are seeing technically this market as passed through and beyond the first target and getting into that second target. So if we get there and we see profit taking, we will have here a great opportunity for a 166 to 126 at 10,000 pips, sorry, 1,000 pips move, which is the kind of move I love looking at and taking. So if you're patient in this market could actually give a very good opportunity here. Um, if you want to learn how I look at the market, I have a program. It's called the Fibstalker Methods Coaching Program. It starts every month. I started the enrollment. I will start the enrollment for the February coaching program next week. If you want to get involved, just drop me an email or leave me a message on the blog as well. I'll contact you. And the New Zealand dollar versus the US dollar is also a very interesting market. It has been battered down by the policy of the central bank of New Zealand Central Bank, and brought price into again that 0.77, which we have been following in the past and timing in the past. Beautiful moves into this level, which could be timed. Another level which was timed here was the 0.8065, and you can review my videos. And now this market is actually on top of this level that has been working for a number of times, 1, 2 and 3 and 4, and that's the fifth time. And actually I don't see this market going lower at the moment. Actually the upside though is also limited because of this move lower. On the weekly time frame we might have a seller coming in very early here at this 0.80 level. So if you're in a long, no reason to change your view here. This market could actually offer another entry from lows to highs here if he comes back, and that could be another opportunity to add to this move into the 0.80. And finally, yes, there is the Swiss franc, which has been, and it is always very technical. That's a market I love and analyzing and trading. And on the weekly time frame we are on top of this 0.8843, which is a first target above parity here. And when we move on the daily time frame we also see a very technical market here. We traded another bull anchor and we were able to identify this level in advance again, and then time them with the Fibstalking timing technique. If you want to get an idea how it works, just review my videos, drop me an email. As you can see, the market went to the first and second target, and now this market I believe started the retracing. Will not go much higher here. It's not the time to get involved long in this market. This market is likely to retest the 0.9951 before a new push higher. And this is it for this week. I hope this review was interesting. If you want to know how I look at the market, you can go to fibstalker.com, where you find over 500 videos, my weekly review and midweek review. And you can also go on the www.fibstalkertrading.com, and you can see what I offer there. And if you want to get involved, I have a very good coaching program that teaches you how to look at the market, learning how to spot footprints of on price of modern algorithms, which are very active on high volume markets, including forex. Thank you very much for your attention, and I wish you a great week, trading week and non-trading week. Bye bye now.